If you're collecting Social Security or SSI at this moment, or if you've got an aging parent who is, I'm asking you to put down your phone, pause whatever task you're in the middle of, and hand me the next 10 minutes of your undivided focus. Because a shift just took place within the Social Security Administration's enforcement machinery that places every bank account carrying your name under a degree of examination that simply wasn't there before. Not the account you happen to remember, not merely the account where your payment lands. Every account, including the ones you've completely forgotten you ever set up, including the ones bearing your name that you'd never even think of as belonging to you. On August 1st of 2025, the Social Security Administration published a directive titled EM-25046 that broadened access to the financial institution system, aiming directly at Americans who are 65 and up. Then, on April 27th of 2026, that same directive was rewritten and broadened once more. This round stretching the financial institution verification requirement across every fresh SSI claim approval in the nation, with zero exceptions, tied to how little you claim to possess. I want you to let that settle for a moment. Not certain claimants, not the individuals marked as questionable, every last one. This isn't gossip. This isn't a YouTube headline built to frighten you into pressing play. This is a recorded, numbered federal directive parked inside the Social Security Administration's own policy framework at this very moment. And the vast majority of seniors I've spoken with have never once encountered the phrase access to financial institutions in their whole lifetimes. That stops today, because before this video wraps up, you're going to grasp precisely what this system accomplishes, precisely what it hunts for within your accounts, precisely which seniors are stepping into a snare they can't even see, and precisely what action you must take this week, not next month, this week, to guarantee that a forgotten bank account doesn't wreck a benefit you've leaned on for years. I've devoted more than 10 years to examining retirement benefits and the financial regulations that quietly redraw what seniors can rightfully claim. And the pattern I witness again and again isn't seniors attempting to defraud the system. It's decent, hard-working Americans who never realized a rule existed until the moment a letter showed up demanding repayment of money they never understood they owed. I refuse to let that happen to you. Before we continue, if you haven't subscribed to this channel, take care of that immediately. Tap subscribe and switch on the notification bell, because what I'm about to lay out for you is precisely the sort of information the Social Security Administration will never seat you down and personally guide you through. Nobody phones you to spell it out. Nobody sends you a plain English summary of what shifted. The system merely operates quietly behind the scenes, and the seniors who suffer from it are the ones who never realized it was operating until the harm was already finished. Let me describe exactly what this system is using the Social Security Administration's own wording, not a watered-down version crafted to make this seem more alarming than it truly is. Because the reality said straight is already grave enough. The Access to Financial Institutions System, AFI, is an automated procedure the Social Security Administration relies on to confirm claimed bank account balances directly with financial institutions, specifically to spot potential excess resources held by SSI applicants and recipients. It doesn't halt at the account you disclosed. It uncovers hidden accounts through something termed geographic searches. And the agency performs as many as 10 of these geographic searches per person for every single review. 10 individual searches connected to your name, your address, and in numerous instances, the address and identifying particulars of anybody handling your benefits for you. This isn't a single check when you first sign up. The Social Security Administration deploys AFI throughout the initial application stage, and then once more during periodic redeterminations of ongoing eligibility, specifically to catch excess resources and to discourage the identical problem from recurring. Read that closing phrase once more. Discourage the identical problem from recurring. That isn't the vocabulary of an agency conducting a one-time background check. That's the vocabulary of an agency that has engineered permanent, repeating surveillance of your financial accounts into the very framework of your benefit. This isn't hypothetical or confined to a small number of states. The AFI initiative is completely operational for SSI eligibility and waiver reasons across all 50 states, the District of Columbia, and the Northern Mariana Islands. And here's the fact that ought to truly alarm you if you figured your bank somehow sat outside this system. As of the latest reporting, the agency's AFI vendor had roughly 10,000 financial institutions logged, with more than 8,000 of them actively taking part and replying automatically to requests for your financial data. That signals the overwhelming majority of banks and credit unions throughout this country are already connected into this system, prepared to surrender your account balance the instant the Social Security Administration requests it. And you're never present when that exchange occurs. Now let me explain why this is unfolding, because grasping the agency's genuine reasoning isn't me championing the system. It's me equipping you with the precise knowledge you require to remain on the correct side of it. At present, there are upward of 8.2 million SSI beneficiaries on the rolls in America, and roughly 2.6 million fresh applicants request SSI each and every year. The countable resource ceiling has stayed frozen at $2,000 for a single person and $3,000 for a couple, a figure that, unlike Social Security retirement benefits, hasn't been modified for inflation in decades. An internal audit pinpointed 54,912 SSI recipients within one fiscal year who had disclosed financial accounts summing to under $400. And the agency's own conclusions demonstrate that recipients who underreport their financial account balances constitute one of the largest and most repeated origins of payment mistakes across the whole SSI program. From the agency's viewpoint, every dollar handed to somebody above the resource ceiling is a dollar the program was never permitted to hand out. And under federal law, that money isn't simply pardoned. It transforms into an overpayment. And the Social Security Administration holds the legal power to reclaim it from you. Occasionally, years down the road, occasionally after you've already spent the funds on rent, on medicine, on the very essentials the benefit was created to cover to begin with. The agency's declared rationale for widening AFI is that spotting a resource problem early via frequent automated verification stops that overpayment from swelling into a figure big enough to genuinely ruin someone's finances when the bill finally arrives. I want you to absorb that reasoning plainly because it clarifies something vital about who this system is genuinely designed to catch. It isn't chiefly designed to catch folks intentionally concealing money. It's designed to catch folks who merely forgot. And this is where I need every person watching this to pay close attention, because this is the portion that converts an abstract policy revision into a real and pressing danger to your benefit. Under the existing SSI rules, any account carrying your name qualifies as a resource. Even joint accounts where the funds inside aren't genuinely yours. If you hold an account jointly with somebody who isn't eligible for and doesn't collect SSI, the Social Security Administration's baseline presumption is that every dollar inside that account is yours. Consider what that translates to in reality. If your mother listed you as a joint owner on her checking account 5 years back for emergencies and you utterly forgot about it, that account's whole balance counts as your resource until you can demonstrate otherwise. And demonstrating otherwise isn't automatic. It demands documentation. A signed declaration from the other account holder clarifying the account's real intent. Proof of deposit and withdrawal habits establishing the money was never yours from the start. People forfeit months or even years of SSI benefits over precisely this situation, every single redetermination cycle, because they never grasped an old joint account was sitting there tallying against them. Now, pair that with the second portion of the snare. As of April 27th of 2026, the financial institution verification requirement has been broadened to encompass all fresh SSI claim approvals, all initial claim reopenings, and all appeal reversals creating initial eligibility. Meaning, the threshold that formerly functioned as a cushion, the rule that historically indicated a complete bank verification only executed when your disclosed resources exceeded a particular dollar figure, has been eliminated for a vastly wider group of applicants and recipients. Internally, when the system discovers a balance that shoves a recipient's verified resources beyond the ceiling, It produces an alert that an SSA staff member is obligated to examine to decide whether ongoing eligibility has been impacted. But the system deliberately doesn't demand that identical degree of human examination when totals remain beneath the ceiling, which means there's practically no cushion for the silent, accidental instances where a forgotten account softly nudges someone past the edge. The system isn't built to grant you the benefit of the doubt. It's built to mark the inconsistency and permit the consequences to unfold automatically. IRS plus 6. Here's what AFI is engineered to uncover in full so that you understand precisely what the scan detects when it operates on your name. It hunts for liquid resources kept in financial institutions, checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts, including things as simple to overlook as an old Christmas club or holiday club account that a relative launched decades earlier and that has been sitting undisturbed ever since. Anywhere you can stash money or possess a certificate at a bank or credit union, this system is engineered to touch it. And the fallout from a mismatch isn't mild. When SSA launches what's termed a limited issue workload to probe an inconsistency, you might get a letter requesting extra information or documentation. And ignoring that letter for 30 days frequently produces an automatic ruling against you for the time frame in question. Not a caution, not a grace period, an automatic ruling against you purely for failing to reply quickly enough to a letter you may not have fully grasped. If that inconsistency becomes a verified overpayment, you receive a formal notice of overpayment, specifying the precise dollar figure owed, the particular months involved, and the stated cause. And at that stage, the agency isn't requesting. It's demanding repayment of money you may have already spent on the exact things your benefit was intended to cover. SSA's new SSI improvements team verified in early 2026 that automated financial resource checks are now routine for all fresh SSI-aged claims, with the exact same forceful approach actively being widened to disability-based redeterminations too. This isn't decelerating, it's speeding up. And it's speeding up specifically into the population this channel serves: seniors, the disabled, and the folks who rely on these benefits the most, and who possess the smallest cushion for error when a surprise repayment demand shows up. IRS plus 2. Now, I need to inform you about the scam that has already latched on to this exact rule revision. Because the moment seniors begin hearing about AFI and bank verification, criminals begin capitalizing on the fear it generates. Here's exactly how it operates. A senior learns about this new verification system from a video like this one, from a news piece, from a neighbor echoing something secondhand and only partly understood. Within days, that senior gets a phone call or an email from someone posing as a Social Security verification specialist, a federal benefits compliance officer, or an account review agent. The caller clarifies that because of the new 2026 rule, the senior's accounts must be pre-verified or pre-cleared right away, and that they can personally manage the process, safeguard the senior's benefit, or shelter their accounts from the official scan for a fee. Occasionally, a flat few hundred, occasionally a slice of the ongoing benefit itself. Here's the lone sentence that unmasks every variation of this fraud instantly, and I want you to commit it to memory, word for word. There is no fee, no service, and no third party anywhere on earth that can shelter your accounts from official Social Security verification or finish that process for you. The legal authority for this verification flows straight from federal regulation, specifically Code of Federal Regulations Section 416.207, which mandates every SSI applicant to grant the Social Security Administration direct permission to reach financial institutions as a term of eligibility. There is no opt-out service. There is no paid shortcut. There is no third party who can intercept or reroute a process that exists solely between you and the federal government. Anyone pitching you that is peddling pure fiction. And what they genuinely want is your Social Security number, your bank account number, or a one-time verification code delivered to your phone. The identical information a criminal requires to empty your account directly. Note this rule down. The genuine Social Security Administration doesn't cold call you from nowhere, insisting that you confirm your Social Security number or your bank account particulars over the phone to satisfy a new rule. They already possess your number. When they authentically need something from you, it arrives through your application paperwork, your redetermination notice, or an official letter. Never through an unexpected incoming call fabricating urgency. If that call arrives, hang up at once. Then phone the Social Security Administration yourself directly at 1-800-772-1213, a number you look up yourself at ssa.gov. Never a number any caller supplies you. Report the scam contact to the SSA fraud hotline at 1-800-269-0271 and to the Federal Trade Commission at ftc.gov. Barred. So here's exactly what you must do this week, not eventually, this week, because the system doesn't halt to grant you time once an inconsistency is marked. Step 1. If you or somebody you love collects SSI, sit down and assemble a full list of every financial account carrying your name. Not merely the account your benefit deposits into every checking account, every savings account, every credit union account, every certificate of deposit, every old account at a bank that may have been bought or renamed since you launched it, and every joint account where your name shows up, even if the money inside has never been yours. If you honestly aren't certain whether an old account remains open, phone the institution directly and inquire. The whole aim here is straightforward. You want to understand exactly what AFI would uncover before the scan ever operates, so there are zero surprises. Step 2. Tally up your liquid resources across every account on that list and weigh the total. Honestly against the ceiling. For a single person, that's $2,000. For a couple, $3,000. If you're comfortably beneath, you have meaningfully less to fret about. If you're anywhere near that line, treat this as your cue to gain complete clarity right now, because being near is exactly the circumstance where one forgotten account nudges you over without any warning whatsoever. Step 3. If your financial situation has shifted in any manner, report it accurately and swiftly, rather than waiting to be caught by a scan you didn't foresee. The system is specifically constructed to uncover unreported resources, and timely, accurate self-reporting is always the strongest stance open to you. Step 4. If the Social Security Administration reaches you for verification or mails you a redetermination notice, reply immediately and preserve documentation of everything you turn in. Never disregard the letter, never guess at the response. If a particular account or asset situation is murky, that's a discussion for a qualified professional who can examine your actual circumstances, not something to gamble on. And step 5. Guard yourself against the scam we just addressed permanently. No legitimate service can shelter your accounts from official verification for a fee. Full stop. No exceptions. I want to leave you with something direct before we finish because I believe you deserve to hear it stated plainly instead of cushioned. This broadening of financial institution verification is part of a far bigger movement toward automated, continuous, and progressively thorough examination of exactly what seniors and benefit recipients genuinely possess. And that trend isn't decelerating or turning back. None of it shows up with a friendly phone call guiding you through what it means for your particular situation. None of it comes with a government worker seated across the table clarifying how to stay compliant before a slip becomes a debt. The system merely operates silently, continuously in the background of your life. And the seniors who emerge from this unhurt aren't the ones with the simplest finances. They're the ones who understood exactly how the verification functions, who knew precisely what it would uncover before it ever operated, and who put their own financial picture in complete order before the system came searching. You remained through this entire video. That reveals something about you. It reveals you take safeguarding what you rely on seriously, and that you grasp the difference between being ambushed by a rule and staying ahead of it permanently. Subscribe to Senior Smart Finance and switch on the notification bell right now, because the verification systems behind Social Security and SSI keep shifting. And this channel decodes every single change in plain English before it ever lands on your doorstep as a problem. And before you exit this video, share it with one person in your life who collects SSI, or Social Security. A parent, a sibling, a neighbor, someone from your church, anyone who relies on this benefit the way you do. The Social Security Administration isn't going to phone them and guide them through any of this in plain language. You might be the sole person who ever does. Stay informed, stay protected. See you in the next one. There is one further piece of this system that virtually nobody talks about, and it is the piece that renders this verification broadening fundamentally distinct from anything that preceded it. The participation of representative payees. When AFI conducts its geographic searches, it doesn't restrict itself to the address and identifying information of the beneficiary alone. It can additionally draw in addresses and identifying particulars linked to a representative payee if one has been designated to handle the benefit. Consider what that means for the millions of seniors throughout this country who, because of age, illness, cognitive decline, or plain convenience, have a son, a daughter, or a trusted caregiver named as their representative payee to assist in handling their Social Security or SSI funds. The verification system isn't merely scanning the beneficiary's own financial footprint. It's reaching into the financial footprint of the person handling their affairs for them. If that representative payee has blended funds, employed a joint account for both their own money and the beneficiary's benefit, or simply holds financial accounts that get pulled into the geographic search radius, the resulting picture the agency assembles can grow tangled in ways that are genuinely tough to untangle after the fact. This is exactly why federal regulation demands permission to be granted not merely by the beneficiary, but by every DMOR whose income and resources the agency treats as available to that beneficiary. And if that permission is ever revoked or refused, the beneficiary cannot stay eligible for SSI payments at all. If you're a representative payee for an aging parent, or if you yourself depend on someone else to handle your benefit, this isn't a detail to breeze past. It's a direct instruction to sit down with that person this week and ensure both of your financial pictures are completely clean, completely documented, and completely divided from any ambiguity that an automated geographic search could misinterpret. The honest truth is that this whole system was constructed around a number that hasn't budged with the cost of living in over 4 decades. The $2,000 individual resource ceiling and $3,000 couple resource ceiling that decide whether you retain or lose your SSI eligibility were established decades ago and have never been modified for inflation since. Which means an amount of savings that would have been genuinely modest when that ceiling was first set is in today's economy scarcely enough to cover a single surprise medical bill or a major home repair. That is, the deeper injustice lying beneath everything we've covered today. And it's worth naming plainly, even though it doesn't alter what you must do this week. The agency didn't invent the fixed dollar ceiling you're being weighed against. It only constructed a quicker, more thorough, more automated method of weighing you against it. Grasping that distinction matters because it shows you exactly where your effort should flow. You cannot alter the resource ceiling by being annoyed with it on a Tuesday afternoon. What you can alter starting today is whether you step into the next verification cycle with a complete, accurate, documented picture of every account that bears your name, or whether you step into it the way most seniors do, with a forgotten account resting somewhere in the system, waiting to emerge at the exact moment you can least afford it. 2.